First off, let's just get your view of. I was gone, right? Yeah. So I came back. I came down the mountain, and they're like, "Yo, Russia invaded Ukraine."
World War III started, bro.
Yeah. I'm like, "Oh shit!" I had no idea this. Like, my phone was off. I'm like, "All right, cool. Let's talk about that first." So, what is going on when it comes to the U.S.'s role in this from a financial perspective, right? When it comes to Jerome Powell, everything that's happening in the market, like, how should people think about the U.S.'s role in what's happening in Russia and Ukraine?
Yeah, so the U.S. is definitely asserting its dominance in terms of, being the global reserve currency and, kind of the world's largest military and kind of pressing their thumb on top of, a couple really key organizations. If you think about NATO and you think about SWIFT, which is the kind of bank messaging platform that everyone trades and settles finance with. And so, kind of being the kind of lead dog there, they can put that influence over the whole world and say, hey, look, we're effectively going to put iron curtain around Russia, the Russian economy, Russian oligarchs, Putin himself in terms of his assets, and making it very difficult, making it very painful for them to continue what they're doing. Obviously, Putin is pretty resolute in his game plan here. But the reality is the Russian economy is going to suffer tremendously as a function of this, if it's not already suffering.
And how much of a role does that play, do you believe, right? You're not a war strategist by any means, I don't believe. But when it comes to the financial implications, right, I think part of this is like, let's cause some harm without dropping troops off and starting to go to war ourselves from a financial perspective. How does this play out? Does Russia renege on this pretty quickly and say, hey, look, this is much worse than we expected. We weren't able to move as quickly as we thought we could from a military perspective. Our citizens are really hurting financially now. We're cut off from the world. Just talk me through kind of how you see that playing out.
Yeah, so there's a lot. It's a loaded question. I'll do my best to kind of summarize the different aspects of it. But, so let's start by saying Putin is a psychopath. It's pretty clear. And I don't mean that like as a joke. I mean, like if you look at any sort of like study of psychopathy, like he very much checks all the boxes. I know a few people who check all those boxes. Anyway, so
you could say John's name.
No. Whoa. Definitely not John. Definitely not John. Anyway, so my point is, Putin's not going to feel any remorse, no matter how bad it gets for the Russian economy or the Russian people. So his military objectives are his primary objective, right? And kind of showing that force. And so we have to carry on. Okay, if this continues and these guys continue to go, it's very likely that the Ukraine eventually loses whatever resistance that they're putting up. Just a matter of time, not a matter of if. And so in that regard, as long as Russia is occupying Ukraine, which could be indefinitely, right? They're not particularly popular in Ukraine. It's not like they're liberating a bunch of Russians. They're actually pissing off a bunch of Ukrainians. And so as long as they're occupying Ukraine, you could expect to have Russia sort of cut off from global financial markets for an extended period of time. And so what does that do? You think about the second and third order effects, right? You've already seen the price action in Bitcoin. Was that yesterday or 2 days ago, where stocks were down and Bitcoin was up a tremendous amount. You're going to see assets like that become sources of liquidity for Russians, both citizens and people who are politically connected to Putin. And then there's also the third order effect of kicking Russia out of these indices, kicking Russia out of basically the global economy. Really sort of kind of rejiggers the entire puzzle, if you will, in terms of the weightings for other countries and indices, the weightings for other countries in terms of the supplies of commodities and goods. So it kind of puts a lot of, costly friction on top of the global economy and on top of global financial markets at a very kind of awkward time, right?
And how do you think, so there's been a lot that's happening, obviously, from companies, products, all this stuff kind of moving out and removing themselves from circulation in Russia, saying we're not going to sell goods, services there, we're not going to do those things. But when it comes to the US dollar specifically, right, as the global reserve currency of the world, how does this work in Russia if they actually get cut off?
Yeah, I mean, so they're effectively cut off now, right? Like it's they're not, all of Russia's major banks, I think, with maybe the lone exception of one bank or something like that, are effectively cut off from SWIFT. So that means, their assets are frozen. And so if they try to, they're bankrupt. There's no other way to describe it. If you can't meet your liquidity and your daily financing needs, particularly as a bank, obviously in a fractional reserve banking system, you're bankrupt. So that's an issue. Obviously, you're going to see runs on Russian banks, but it doesn't really matter. Like what even is a Russian bank if it's cut off from SWIFT? What even is a bank if it's cut off from SWIFT, right? So like, I think, this is the key takeaway. It's like they can inflict a tremendous amount of force upon Russia, like the Western society, Western world, US, NATO, all those societies, without ever actually, firing a gun or shooting a missile. And I think that's exactly what's going to happen. And we're early in this process. As long as Russia remains cut off from global dollar financing and is not having that materially replaced, because it's not clear that China President Xi is really on board with what's happening right now. And as long as China's not really offsetting that to a tremendous degree, the Russian economy is going to shrink and continue to shrink and shrink and shrink and shrink.
And is this something where you think that they'll eventually turn to a digital asset like Bitcoin, or you think that they'll eventually try to make their own currency digitally or something else like that?
Yeah, so they have their own version of SWIFT, right? Russia started working on that a few years ago. It's the Russian version of SWIFT, so you can imagine it's not exactly what you want. I mean, you think about
not
like,
the same thing.
Yeah, exactly. You know, you have like the iPhone that's made in Taiwan, and then there's the knockoff iPhone made in Russia, and I'm guessing it's a little bit worse. Touchscreen doesn't work, and so that's exactly what's happening, right? Like there's, I want to say it's something like 400 or something financial institutions that are on that, but none of the major ones, none of the ones you need to do business with if you're trying to do global international markets. I mean, Russia was the world's 11th largest economy before this started.
Yeah.
So this is a major, it's a major blow to the global economy, but it's not as big of a deal to the global economy to lose Russia as it is for Russia to lose the global economy. Now, I say that to say this, like clearly there's an issue here with respect to energy prices. One analysis I was doing, I sent your brother some charts. I'm not sure if you guys have them or not, but the one, when you look at energy price spikes, historically, and how I measure energy price spikes is sort of, you can look at the speed of the change in price, right? Like, and so kind of like what tends to line up best with having impact on the economy in terms of perpetuating recessions or perpetuating big drawdowns in the equity market. Anytime you look at a energy price spike over, 100% on a 2-year basis, like, so, you tend to get some economic slowdown or recession or a big drawdown in the equity market. And we're already over that. But more importantly, we're about to hit the 2-year anniversary of the negative energy price from March of 2020, right? Mm-hmm. And so not only are we going to be like up, 100 and something percent, but we're going to be like up, maybe several 100%, from that particular low. Obviously, that's a short-term trading low. But, this is, I say all that to say this, which is, look, we were already in an environment where growth is trending lower. Now it's bouncing now. Again, I've talked about this at nauseum, so I don't need to bring it up here, but it's bouncing now, but the trend is lower in growth. And it's very likely that the trend is lower to a place that's below trend, below our potential growth rate, just as a function of all the tightening we've seen in the economy already from monetary policy in terms of rates repricing, already from fiscal policy in terms of not, getting the Build Back Better program passed and basically returning back to our normal fiscal state. So this is an economy that is already weak and is about to get its knees chopped off, right? Yeah, as a function of this crude oil energy price spike.
Hey, you, did you like this video? Great. We make 5 of them a day and post them here on this channel. Make sure you're subscribed, like the video, and see you next time.